The following is a presentation of TFNN, live at TFNN, The Money Masters. Now, The Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the June 6th, terrific Thursday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with tools that, well, just simply tools that empower human potential, because living up to our potential is what we must master each and every day. So let's begin with a couple of empowering beliefs, or what I consider to be empowering beliefs. It's not what we get, but who we become, what we contribute, that really gives meaning to our lives. You know, life, folks, it is a gift, and it offers us, you and me, the privilege, the opportunity, the responsibility to give something back by just simply becoming more. And those who have learned the power of sincere and selfless contribution, well, those folks, I guarantee you, they experience life's deepest joy. That's called true fulfillment. I discovered a long time ago that if I helped people get what they wanted, I would always get what I wanted, and I would never, ever have to worry. Question as you begin your day, what contribution is it that you're going to make? Make sure you make some type of contribution today, and it will be a beautiful day. Let's go check out these markets. Let's go see if this is nothing more than some more bear bait that's being thrown out there, if the bulls are really going to be able to take charge here. We've got the Dow up 19 points, trading at 14,980. S&P up 2.5 points, trading at 1611. NASDAQ up 7 points at 3408. Russell 2000 up 4.5 points, leading the charge here. Well, leading the charge on the way up 4.5 points at 972. NASDAQ up pretty much flat. It's up 2 points at 2939. New York Stock Exchange, that's up 15 points. That's up 0.2%. We do have, haven't seen this here for a while, we do have net advancing issues out here, about 983 right now. Our call-in number is 877-927-6648. Give me a call, folks. We can go take a look at your stock chart. We're going to start off by taking a look at the ES Mini out here. Right now, as we came into that 10 o'clock session, we did get that bullish engulfing candle in the marketplace. So we're going to see if the bulls here are drawing a line in the sand right at around that 1603.50 level. And how we're going to know is I've got 4 squiggly lines. I've got a number of lines on this stock chart, but I've got 4 colored squiggly lines in the bar areas out here. And not that you want to start off by going to the bar early on in the morning, but if we take a look at that bar area, that blue line is the 50-period moving average. That blue line has kept any kind of bullish runs in place out here, has acted as resistance. It has been a strong area of resistance ever since 1:30 in the afternoon on June 4th out there. That high was 1637. If, in fact, we see a close above it, not a test, but a close above that 50-day, after we've seen some bullish candles, which we've got out there in the marketplace, that will be the indication, in my opinion, that we're going to see a nice little bounce out here in the marketplace. That bounce take you up to at least 1626. You're at 1609 right now, and possibly as high as 1646. But it is most certainly, without a doubt, the bears who have control of the ball, and we'll see whether or not the bulls can pull anything off here. If they can't, what we're going to see on the ES Mini, we're going to see a move all the way down to the 0.618 retracement, and that'll take us into about 1589. That's right now trading at 1609 in the marketplace. Let's go take a look at the actual indexes themselves, see what we have going on out here. Let's start off by taking a look at the New York Stock Exchange, because this is going to be key out here. The change in trend is very clear to me. That has been formed in the marketplace so far today. We've had a little bit of a lower low out here. We're now starting to see significant lower lows. Now, this is just the short term. This is just really it is the daily chart that we're taking a look at here. When the lows here should the lows, I should say, really, of April 18th, just because I believe I know where the market's going doesn't mean that's where it's headed to. But if we take a look at the April 18th low out here, that will start to indicate more intermediate term-wise that we're really seeing that 6-month seasonal cycle in full bloom, in full swing out here. That number on the New York Stock Exchange is 8890.45 out there, and that is the April 18th swing point low. If we do take a look at retracements, just to take a look at a retracement off of that low to that key reversal session to the high that was put in on May the 22nd out here, what you'll see is that you're really just below the 0.618 level. That number was 91.98. You're trading at 91.89 right now. You get a close back above 91.98 today, says the 0.618, which is a normal level. The reason why, there's a number of reasons to look for a potential bounce in the marketplace out here. Here's another one, the New York Stock Exchange, which really has been the I'll call the leader with regard to giving us an indication that we're going to start to see that we're beginning to see a change in trend really coming from the broader swath of the marketplace out here. And so we'll want to make sure that you're paying attention to the New York Stock Exchange. If you get a significant move higher today, and I would say it'd be halfway into the bar from yesterday, that would be your real indication that you'll start to see a bounce higher out here in the marketplace. Now, you can also see on my chart out here, we can see that we were talking about this yesterday. We're looking at a short-term lagging indicator. It's a 9 and 18-day exponential moving average. We clearly, with yesterday's down move, that widened quite a bit out there. That is also showing us the change in trend in the marketplace. So the New York Stock Exchange has just what it needs to really do. It is very much oversold, and it's just simply on the daily basis. So on the daily basis, it's oversold. It needs to work off those conditions out there. Now, in a bear market phase, doesn't mean it has to work off those oversold conditions now. Absolutely not. It can keep on moving on down, and until we see the bulls come in and defend their position. And as I say, I'm just using the ES Mini as one of our guideposts out here to be able to take a look at that. And in that last half hour, we saw some bulls stick their neck out there. We'll see if they are doing nothing, then they forgot to hang the food in the tree, and so the bears are just simply going to go out there and they're just going to grab it, and they're going to go ahead and eat it up. And we'll see. And in this next half hour, so in the next 17 minutes, it'll give us a pretty decent indication as to whether or not this is just simply a failed attempt by the bulls in the marketplace. But I do expect that we will see a bounce. The question is when, and as far as how high it'll actually go to, what kind of pattern. And I think it's going to create another nice selling pattern out there. So for those of you that aren't short, this, in my opinion, is not the time to start chasing it. And if you are short, it's a time to consider whether you want to tighten your stops or you're just really in this for what would be the longer-term haul move to the downside. And it does have quite a ways to go. And on the New York Stock Exchange, well, I won't use the New York Stock Exchange. We'll use one of the other indexes out here. Let's go take a look at the S&P 500, and then we'll go switch over to the actual SPY and take a look at what's going on out there. In the S&P 500, the S&P 500, let me just kind of move this off to the side here so we can see what happened. The S&P 500 broke through the rising price channel yesterday, and I should probably change this color here because it confuses me. So if it confuses me, it's got to confuse basically everybody. Let's go ahead and we'll make that a nice dark black line out here, and that's really just a trend line coming off of swing points, and that's the swing point from November the 16th, that low, which was 1343, and then the next swing point low, which was on December 31st out there at 1398. And so what we can see here is the S&P has moved down into that trend line, hasn't totally touched it, but quite frankly, it's close enough for my line of work out here. We can see the 9-day has crossed through the 18-day. It did adjust. I mean, it was really kissing. It was a kiss and tell, or no tell, I should say, maybe back on April the 18th out here when those two lines really converged, and it only converged for about 2 sessions out there. So we did have a bit of a move lower, a little bit of a cross through out there. Again, a lagging indicator in my book with regard to the change in, but it's an additional element to take a look at changes in marketplace. The very first one was certainly the key reversal day and week that we had inside the marketplace on May 22nd out here. So you can see the S&P also bunching up against what should be a support line. If we take a look at a retracement off of the the April 15th low, or is it April 15th? April 18th low, I should say. That is at 1536. We run from that low, which is the previous swing point, all the way up to the high that was put on May 22nd. It's in between floors. That says game is 1593 or so out there, because that is good old sweet 618, and it is in between floors right now. Let's go take a look at the SPYs, see what the SPYs were doing. All the ETFs yesterday moving into with and had volume, so they have conviction on the way down. And so that also, to me, is another indication that the move lower overall is not done. But what the SPY here was able to do was able to get into the area where it broke out gaps. It came into the, I don't even know if it did, today I think it got down to test the gap. The low of that gap. Now, when I say the low of the gap, I'm using the gap up candle. So I'm using May 3rd, and I'm talking about the low of that trading session, which was 161.04. Volume there, 144 million. Yesterday, you come down into it with 211 million. Yeah, that's volume to the downside, no question, but only got to 161.13. 161.14, 161.04 is the actual low. Now, it stopped just before that area. Now, it had all night to charge. In fact, when we looked at the ES Mini, all it really did was move sideways out there. So what should have happened inside the SPY this morning, it had an opportunity to stop right before a swing point. It had the opportunity to just simply recharge itself. It has all the horses running out here, because you had 211 million of those horses going against that what we'll call a breakout, because it was a gap up of only 144 million horses, and it couldn't jump through that gap this morning. That should make you say, something to think about. So far, what have we seen this morning? Well, we saw this morning a test of that area, because it got down to 160.94, so it's testing that area. That was 161.04. We've seen the test. You get it closed today above 161.04, and if you do it on lighter than 144 million shares, that in itself sets up the possible next move up that you would want to be able to take a look at selling. Where would that be? Well, if you just come from the swing point high of May 22nd, right now we'll just simply use the low of today out here. The dead cat bounce gets you right back to where? Right back to the bottom of that rising price channel, which would be right around 164.04. Right at around 164.04, that would be your dead cat bounce. That would be where I would be really paying attention to what's going on here with volume. Is this volume on that way up there? Is that light volume, or is it accelerating volume? Accelerating volume just simply says, okay, it can move into the 165, the sweet 618 area, and that is what's going on with the SPYs. So the SPYs stopping right before that swing point with all the energy, all the volume in the world, and it wasn't able to take that out. Now, what if it closes below? If it closes below that swing point, that gap up from May 3rd, which is 161.04, it will move quickly down into the May 2nd high at least, which is 159.89 out there. More likely, it'll move all the way down into 155.94. That is the .382 retracement off of that November 16th low out there. 877-927-6648. We'll be right back, folks.
The Art of Timing the Trade Charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade Charts allows you to scan for Fibonacci formation setups, including Gartleys, butterflies, ABCs, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We've got the Dow is up 10 points. S&P is totally up 3 points, I should say. The S&P is flat. Composite up 2. Russell 2000. Lead dog in the clubhouse up 3 points right now. Google's up $1. Apple's off $6. We'll take a look at those. At least take a look at the Apple stock chart. They are the leader in the clubhouse on the way down. Netflix is off 2.5% this morning, down almost $6. Pay Systems, I should say Pay, Verifone Systems, that's off 18%. We looked at that earlier, or at the end of the last segment. That's off $4. Smucker, J.M. Smucker Company, they're off $3.40. That's off about 3% here. Vera Bradley, they're taking it in the shorts here, even though I don't think they make shorts. Maybe they make women's shorts. I think they're just mostly a handbag, but what do I know? Vera Bradley, VRA is a ticker symbol. They're down 11% this morning, up $2.50. Francesca's Holdings, they're off 8%. Asana Retail Group, ASNA, so retail sector getting a little hurt here this morning. They're down 10% off $2. To the upside, you've got the VMware up $4, Lightning Box, that's a new IPO. LinkedIn is up $2.65. Regeneron Pharmaceuticals up $2.95. Equinix up $2.25. Mohawk Industries up $2. Clovis Oncology up a couple of bucks. Yum Brands up $2. Let's go back to the indexes and the ETFs. We'll finish those off, and then we'll take a look at something else out here. We've got the NDX 100. What did it do yesterday? Well, the NDX coming into the gap up from May 3rd. The low of that, 29.37 and a quarter. The actual close here yesterday, 29.37.14. So you are trading just below. Well, you're trading at 29.35 right now, 29.35.36, and the low of that gap is 29.37. So it's into that gap. You close back, and it closed in just slightly yesterday, giving us a signal that, hey, it may want to go ahead and close that gap. That would be the high. That would get down to the May 2nd level, which is 28.77 inside the marketplace. Let's go see what the actual Qs did here. The QQQ, come on, get up on my screen there, Mr. or Mrs. Q. Give me a moment here. I pull something else up. So as we take a look at the Qs, I don't even think that's very good grammar. But they were coming into the gap up as well. Let's take a look at the volume out here. You had volume yesterday. 211 million shares coming into what would be considered a breakout session, 144 million. Now, the low of the gap, 161.04. Yesterday, got down to 161.13. So here, you stop just before an important area. Should have recharged, should have been able to jump through that, coming in there with volume. Right now you're trading at 161.18. You are just above that level. Volume so far today has been 45 million shares, so that's, again, going against 144 million shares from that gap, so it's coming in with pretty good volume. 211 million, so we've been trading for an hour. You multiply times 6 just as a straight line, 240. So you've got some pretty good volume inside the Qs here this morning. We'll want to pay attention to where the Qs close today and the type of volume, see how it trails off, if it does trail off or continues to accelerate to the downside. But right now, that gap is holding as support. We took a look at that on the SPYs. Now the Qs, I've got the SPYs up on my screen. What the heck? I apologize for that. How could I do that? Now let's go actually look at the Qs. My goodness gracious. Yeah, I got the SPY, not the Q. Thank you, Paul. I'm a slow learner out here. I hope that's not really the case, but let's take a look here at the Qs. All right, so if there was a way to just go back and reverse time and back up, I would do it in a heartbeat. But I'll just have to just say, you know what? That's the way it was. I think Walter Cronkite used to say that, right? May 3rd. So if we take a look at that May 3rd gap up below there, 71.91, 34 million shares. Yesterday moving down with 48 million shares, getting down to 71.99. So stopping before it got to the gap. Should have had the energy to recharge and blow through it. It did not. However, this morning the low is only $72, so it has not been able to test 71.91. No real release of information. Volume out here today, 11 million shares. So it's got good volume. Yesterday was 48 million shares. Actually has better volume so far than it did yesterday. We can put a 60-minute chart up on my screen inside the Q zone, really test that theory out. But right now, still holding as a support area. Of course, it has not tested the low, so it could just be recharging to try to really take on that area. If it gets below and closes below 71.91, it'll be a simple hop, skip, and a jump to 71.43. That's the high of May 2nd. But if it does that, 69.96 would be on the horizon. That'd be sweet. 618. We can see the kissing. This is the Qs, the 9-day and 18-day. They're actually kissing right now. You've got one at 72.93, the other at 72.92. When we get back here, I'll try to make sure that I keep these things straight. We'll take a look at the DIA. I promise you, it'll be the diamonds, and then we'll take a look at the IWM. Just finish off the ETFs out here. 877-927-6648.
Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. A flat market out here. Dow's up 8, S&P up 60 cents, NASDAQ up a couple of points. New York Stock Exchange still green out there, and advancers are ahead of decliners out here. Just to finish off the Qs, I did put the 30-minute chart up on my screen. We can see they've made a 1.272. It says 1.32 on my screen. That is close enough to me. So they have made a 1.272 expansion of their last set of swing points. Again, the 30-minute chart that we're looking at, that coming from the 12 noon time frame low on the Qs. That was 72.43 up to the high that was put in at 11 o'clock. That high was 73.82. So the low that was put in down here on the Qs coming in yesterday at 3 p.m., that made your 1.27. It made a nice butterfly. You can see that butterfly pattern out here. So that was your butterfly buy pattern. Now, volume-wise, we're talking about taking a look at an hourly chart and then realize, well, I can't really do that because of the last half hour of the day. So I really need to take a look at half-hour charts, 30-minute charts. So let's do that. The volume here for the just see what the volume is during the first hour of trading. So from 9:30 to 10, we did, or the Qs did 6 million shares, and then to finish off the 10:30 did 3.6. So 3.6 and 6, that would be 9.6 if we add that math up correctly. So 9.6. Let's come and take a look at yesterday at the open. The open, he did 3.6, and he did 2.7. So you've got volume this morning here is hot and heavy, heavier than what we saw yesterday. Yet the Bears have not been able to push through. That's kind of an interesting statistic, isn't it? How about that? Or a piece of information. Something to think about. Let's go take a look now at the daily chart here of the diamonds, and we can come back. We can take a look at volume on the diamonds as well. Right now, the diamonds here yesterday, they got down to a low of 149.29. That was the low. They closed at 149.31. So really closing at their lows. 149.29. The low they were going after, 149.20. That was the gap up from May 3rd. 6 million shares there. So far today, it's gotten down to 149.20. So it is tagged and it is touched. It has kissed that low, just like the 9 and the 18-day EMA. They're kind of in a nice little hug and embrace there right now as they're attempting a cross through. Again, the lagging indicator in the marketplace. You start to see that cross through, and as that expands, that'll tell you if trend-wise, whether you're on the right side or the wrong side of the trend out there. So volume was 5.9 million shares on May 3rd. Yesterday, coming down with almost twice as much volume. He did 9.4 million shares out there. Now, volume-wise, so far in the first hour, 1.7 million shares. Let's go back and take a look at that 30-minute chart, see what type of volume we've got inside the diamonds during the first 60 minutes worth of trading out here. DIA, so we're going to come back to yesterday, the 5th, and that was... There we go. So at 10 o'clock, it was 569 and 873. So you got about 1.4 million versus yesterday. I think, or today, right now, you've done about 1.7. So you do have some accelerated volume inside the diamonds as well, but they have not been able to take out that gap. Something to think about. Let's go finish this off. We'll take a look at the old Russell 2000, the IWM. Now, the IWM, take a look at this. This has been the weakest link out here, and it is not the weakest link right now on this leg down. How do I say that? Well, take a look at the May 3rd gap. Here's the May 3rd gap way down here, way over here to the left. That gap is low as 94.35. It's traded at 96.47 right now. It has not been able to make its way anywhere near that area out here. That's kind of an interesting thing. Now, what it did do yesterday was it took out a swing point with volume. That swing point was the swing point down here from May 23rd. That had 44 million shares. 96.51 was the low out there. Yesterday, you closed at 96.43 with 58 million shares. So you had volume accelerating, but the weaker links out here right now, if you just simply compare the breakout session from the May 3rd area, the IWM is actually stronger than the other four. Now, the IWM may have moved higher. No, not really. As I take a look at these on my screen here, as I say, just something to think about. Now, let's go take a look around the world here. Let's go see if we can see what is happening over here. Well, we know we had a continued sell-off. Why did that go? Okay, hit the wrong tab. Let's start off with the Nikkei. So the Nikkei here last night attempted to get back inside the 0.382 retracement level, which was 13,145. It had closed at the session lows on June the 5th out here. Now, what can we learn about this Nikkei chart? Number one, we can see that it's below the 0.382 level. It says that 11,416 would certainly be on its horizon. It's had, it's more than 18% off of its highs, probably now in the 19 to 20% range, and all in a matter of, let's call them 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 trading sessions. Now, when you have a down candle like this, well, you can have any wide-ranging bar candle, and you either, in this case here, close at the lows. It tells you that the move is not over. And then, in this case here, inside the Nikkei, certainly after the trading session from 2 days ago, another wide-ranging bar, not as wide as that key reversal session from May 23rd, but still wide-ranging bar. And yesterday, a very small-bodied candle out here. So maybe the selling inside the Nikkei, if it can get a decent handoff, a decent bounce out of the U.S. markets here, maybe that handoff will get a little bit of a retracement inside the Nikkei before it sets up its next leg down. But it's going to be the requirement, the prerequisite is going to be a bounce inside the U.S. market. Now, the Nikkei could bounce up to about 14,038, maybe even 14,7. The sweet 618 level, probably not 14.7. I would say maybe it would get down to the bottom of that May 23rd bar, which is right around 14,483 out here. But right now, still hasn't given you any kind of signal on the daily chart. It's got more room to run to the downside before it gets towards that oversold territory out there. Let's take a look at the other charts. Let's take a look at the DAX. The DAX here backing off as well, not near the 0.382 retracement level, near its 50-day exponential moving average, which is 81.13. The actual 0.382 level is 79.43, so quite a ways down there. We can see the DAX here is trading at the bottom of its trading session right now. It's trading out at 81.28 out there. Let's go take a look at the FTSE. That over in the UK, they most certainly are struggling. That, too, is trading at its session lows here, and it is kind of slicing through the 0.382 retracement level. Let me redraw that. Let's take a look at a couple different retracement levels inside here. Let's take a look at the November lows first. So as we go from the November lows up to the high that was put in there, you can see today really slicing through 63.90. That's your 0.382 retracement level. That says that the what should stop the fall inside the FTSE out here is that set of swing point lows at around April 18th. That's its target area, which is 62 and a quarter, which is also going to take you right into the 200-period exponential moving average. That number is 62.10. So it looks like that is the target out here. And when it gets down there, it looks like it will start to move into the oversold territory, utilizing the relative strength, relative weakness indicator. Let's take a look at the Hang Seng, see what it is doing out here. It also closed towards its session lows yesterday, of course, with the sell-off in the U.S. You would have expected that. Looks like it wants to make its complete its run down to the April 18th area, which is right around 21,423. Looks like it's probably below the 0.786 retracement level, but let's make sure of that. It's really right at it. So it's trading right on the 0.786 retracement area. That number is 21,870. It's closed at 21,838. And you can see here getting very close to oversold, where you would start to see some type of bounce. And that is in the old Hang Seng out here. Let's go ahead and finish this off by taking a look at the Shanghai index. Now, the Shanghai here, I have this pattern set up from a long time ago. It still is active, and I would like to be a buyer of this index right around 2144. Beautiful Fibonacci numbers coming together there. You've got a 0.786 retracement off of its low from December of 2012 to the high that was put in on February 18th, and you've also got a 2.618 expansion. So you got great Fib numbers coming together. Right now, what the Hang Seng is, Shanghai, I should say, I apologize, is doing here. Let's come off of its most recent swing point low, May 2nd out here, up to the high that was put in on May 29th. And the 0.618 level, 23.31, that's really its next stop out there. If it can get below that, 0.786 is very close to the swing point from May 2nd, and so it should head down to that May 2nd level. That is in the Shanghai. Let's take a look at Goldilocks and silver. Right now you've got gold trading up $2 and silver down 7 pennies, so no real movement out there. Let me go ahead and get rid of that chart. And as we take a look at, gold, still, look at these small bodies here. And again, continuing to travel inside April 16th. I just think that spells trouble out here, especially, you got the U.S. dollar index down 40 ticks. Now, I've got I think it's about a 10-minute delay on my U.S. dollar index chart out here. But you've got the U.S. dollar index down 40 ticks, and gold can't get moving. You got to say, something to think about. Let's take a look at what has been moving here. Has been light sweet crude. It's up $1.45 right now, and it is running right into the top of its trend line out here. This trend line, this is a long-term channel, price channel to the downside. This price channel going back into the 2008 time frame. So light sweet crude testing that area one more time, and so you got light sweet crude really behaving properly with regard to what we see inside the U.S. dollar index, knowing that light sweet crude is priced in dollares out there, but you can't say the same for gold and silver out here. So light sweet crude right now at 95.26, up about 1 6/10%, up $1.50 out there. Let's take a look at bonds, see what bonds are doing here at the moment. Let's take a look. We're now switched over into the September contract, and bonds really not doing a whole lot as well. Of course, the market isn't doing anything. The Dow's up 4, S&P is up 39 cents out here, so bonds also really not doing a lot. Let's go check out some of the spider ETFs. Let's go see what's going on inside the sectors inside the S&P 500. Let's take a look at the XLF. Now, the XLF, we know this has been really strong off of the November lows out here. Yesterday, we saw some real signs of weakness out here. And in looking at the XLF, excuse me. Sorry about that. 1 second, need a quick break. Okay, that is gone. Now, as we take a look at the XLF, yesterday you had 88 million shares coming out of this, taking out a swing point that only had 59 million shares. So we have finally seen a sense of weakness, a little bit of weakness. Now, that 88 million shares was also going into 34 million shares from the trading session of May 14th. So looks like what the XLF wants to do out here. You know, and it has a high volume high. That was that key reversal session from May 22nd. So, you know, longer term, 2035, it's going to pay a revisit of that 2035 area. Shorter term, though, what it should do is eventually make its way back down into the May 3rd area. So, you know, just like we were looking at the ETFs, the diamonds, the Qs, the IWM. Actually, the financials and the IWM kind of look the same here right now because the XLF has now made it back into that May 3rd gap area, whereas the diamond SPYs and Qs, in fact, have. So you can even knowing that just knowing that the SPYs have made it back, right? So the SPYs have made it back. Let's take a look at it like this. The SPYs have made it back into the May 3rd area already, or to the bottom of that. And what the financials have not gotten down there. They're not even to the top of that candle. So let's just say you were an intraday trader, and let's just say that we all of a sudden saw this bounce that Steve-O here is forecasting is going to take place inside the market just to work off this oversold condition, just allow more bears to get in on the selling side, the short side of the marketplace out here. If you're going to intraday play something, do you think that it might be inside the XLF? Because it's stronger than the actual S&P itself? That would be something to think about. Let's go take a look at that. I'm just kind of noticing this myself here. So let's go take a look at the XLE. Let's go see what the energy sector is doing with regard to May 3rd out here. Now, the energy sector, this is a beauty, folks. This one is a beauty. You talk about patterns. This has got it all. You got a long-term, A to B equals CD up pattern. That A point, October 4th, 2011, 54 and a quarter. Your B point is the February 24th level, 76.50, and the C point is all the way down here on June 4th. Down at 61.11. A to B equals CD gives you a price projection of 83.37. What the XLF did, or the XLE did, was got up to 83.95. You got to love that. 83.36 is the 1-to-1. It gets up to 83.95. What a beautiful thing. Then you've got two 1.618 beautiful butterfly expansion patterns also completing right in that area. How about that, folks? So you got three patterns completing in the same price target area. You get a reversal session out here. This three-river evening star pattern, that's the combination of May 20th, May 21st, and May 22nd out there. There's your bearish reversal signal out here. Now, with regard to May 3rd, you can see the XLE is one of the sectors that's really dragging the S&P down because it's inside that May 3rd top, or the high out there, which is 79.68. It's trading right now at 79.59. So if you're going to play a short-term trade, it wouldn't be on the XLE. We'll be right back, folks.
Are you looking for a precision edge in the market, something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. The market's really totally flat out here. Let's go check in on soybeans for our man Z in the den. He called a couple of days ago. I believe he is short the beans out here in the last half hour. They've taken a little bit of a nosedive to the downside out here. Looks like they're headed to the $1.27-ish area right now, trading at 1.2884 out here. Needs to really, once it breaks that 0.382 level, that 0.382 level coming off of the lows out here, and again, it's a 30-minute chart that I'm looking at, going back into the 12:30 time frame on May 10th. Once it can break the 127.97 area, then 12:48 is where it will head to. So far, looks so good. Clear sailing for our man Z in the den. Let's take a look at some of these other stocks here. I mentioned Apple was leading to the downside, so let's go check in on Apple, see what it is doing here today, see what kind of volume we have behind this move. So far, Apple's pulling back 4.9 million shares, coming into the most recent swing point low that's got 21 million shares out there. So roughly a similar type volume, but volume really not too bad. Yesterday's move down to the markets, you only saw 10 million shares inside of Apple out here. So Apple was actually kind of buoying the market, keeping it up a bit. So Apple, what is Apple going to do out here? I think over the long haul, Apple still wants lower price. Wants more than that 1-to-1 A to B equals CD pattern that it had completed. I think that it wants more like the 1 to 1.272 area. There's your 1-to-1 that it completed, and that retracement, that shallow retracement says to me that Apple really wants to move back down to that 340-ish level here. But right now, the pullback is not too bad, and not until it gets down into the April 19th area, should it get down in the April 19th area, which would be the 385 to 399 level, will we know if it's going to be able to bust that area out. Now, that only has 21 million shares, so it should be pretty easy to bust that out if and when it decides to take that area on. Let's go take a look here at Netflix. Netflix is trading off. Well, let's take a look actually at Vera Bradley. That's off 9%. VRA is the ticker symbol. I know my daughters used to have a bunch of that stuff. Vera Bradley down with some big volume out here. Let's go see if I can see what their numbers were and what is disappointing out here. VRA, again, the ticker symbol, out with numbers. They generated a net income of $9 million versus 12. And they did net revenues 123 versus 117. So a little cost containment. Maybe they've guided or they have missed their numbers out here. Right now, what Vera Bradley is doing, it is down, with, as you can see, with big volume. And unfortunately, this has a habit of doing that. Again, the ticker symbol VRA. And as we take a look at what it's going out after, it's trading right now below or right at the swing point from September of 2012. That only had 1 million shares. So far today, it has done 3.3 million shares out here. So let's pull this back. Oh, how about this? So it looks like Vera Bradley was. This is not happy times for the shareholders of Vera Bradley. Came out on October 21st of 2010. The low is $22. You're trading at $20.28 right now. So as we pull this back here, you don't have too many shareholders that are in this thing at a profit. So it is trading inside this. It's got this little high volume bar right here that takes you back to June 1st of 2012, and that bar as high as 2168, low as 1952. You're inside that. That really says it wants to at least come back and test 1891. Folks, if you're off to start your day, thanks so much for joining me. I absolutely do enjoy being here with you each and every day. Our man, Basil Chapman, he is up next. It is Terrific Thursday. That means Larry Pesavento will follow Basil, then Daryl Martin, David White, Andy Heck, and then the Tom O'Brien Show from 4 to 6. Have a terrific Thursday, folks. I look forward to seeing you in the morning. Take care now.